third session today, we are looking into accruals and prepayments. So if I'm going to ask myself, what is the meaning of accruals? The first thing with accruals, due to the accounting rules are based on something called an accrual concept. That means the accounting has to take place when a particular transaction occurred instead of when it's actually paid. So for example, if I'm going to buy something, if I go to a shop and I pay for it, the transaction is done. It's been completed, it's been paid for instantaneously. But most of the time when it comes to businesses, it does not happen as such. For example, if you know there is a sales transaction on credit, what happens when you do the sales? You will sell the goods to your customers, but you will get paid for it later on. But do you wait until you get paid to write that into your accounts? No. You have to do that straight away when you made the credit transaction. So that is the concept. There you have generated your income. Your sales has been recorded, but instead of receiving money, you have received your an asset entry into your RLC account. Receivable ledger control will have a debit entry, sales will have a credit entry. That is the simple fact about accruals. But that is for sales. But what if you have other transactions where you may pay early or you may pay late after the fact that particular goods or service or particular transaction has occurred? For example, when you pay rent. When you pay rent, sometimes you have to pay few months in advance, and then you will run through that periods and then you pay again in advance. Sometimes if you look at your electric and gas bill, you will pay later after you received your bills. But sometimes electric companies trying to take your money from you early enough, which is a scam itself, but I'm not going to be going into that part of it. But what we have to remember, sometimes you may pay early, sometimes you may pay late after the fact when those particular instances occurred. So for a business, that is very critical because you need to identify when those expenses or the revenues or the incomes has occurred. If that happened in the same accounting period as the payment has been made, it's absolutely fine. But what if you make a payment after the period is finished? You haven't paid for it in this period, but you paid in the after the period, but the transactions occurred in middle of the period. How we going to account for it? So this is the part we're going to look at it. Sometimes we also may pay for the next period, but the transactions not going to be happen until next period. So what we do, we pay early. When we pay early also, we may have this issue. So we'll look into that in more detail. So I have 5 slides and I have a few more questions also we may work on in this session. So let's see here. What is the meaning of accruals and prepayments? Accrued and prepaid expenses. It can be also the opposite side for the income also. It can happen there, but most likely you'll be tested on the expenses side of it. An expense that have incurred in the current accounting period which has not yet been paid for. A prepaid expense, on the other hand, is opposite, is payment is made in advance for an expense that related to the following period in the current accounting period. So I'm paying now for something I'm going to be enjoy later on. So how we account for it? What is the concept behind that? Let's see what it is. So if you notice that here, the first thing we're going to do towards accounting expense, we debit the expenses account and then credit the accrued expenses account. This expense account will go into your profit and loss statement for that year because your real expense is in this period. But we have this accrued expenses will get carried over as a liability on my statement of financial position. And this will eventually will be staying in your statement of financial position as a liability. On the following period, it will be brought back into your expenses account. And that's what we call a reversal. We'll see that how reversal work later on. A reversal is clearing those carryover balances and putting that back into the relevant accounts. So we'll see some examples of it later on. But on the other side, we have to look at it from the expenses side of it. The prepaid expenses will be having a debit entry again, and it will be credited into the expenses account. So prepaid expenses is an asset account compared to the what is that again? Accrued expenses, which is a liability, and that again will be reversed back into your general expenses account wherever you're going to have it on the following year. So we'll see how they work in a minute. So this example here, an opening accrued or prepaid expenses. That means if you have a reversal, you will have an opening accrual on the credit side of the expenses account, but when you have a closing accrual, that will be on the debit side, and then it will be for prepayment either way around. So we will see some examples of it in a minute. Okay, and then of course for the income, the entries are completely reversed. It will be the other way around. We'll see how these all work when we do practice questions. So let's say here there is some activity like questions. We'll come back to this later in a minute after we explained how things work with an accrual and prepayment account with this Excel spreadsheet I have ready for you. So there are 6 questions we're going to be trying it. So let's say here how this works. So in this scenario, they're asking you, you are looking at interest receivable. So this is an income. So remember, this is interest receivable. Normally, this interest received account, give me 1 second, please. Let me stop sharing for a second. Stop sharing. Let me just find where is the number I had. Okay, so here, this is how the account started off. It has update, the cash receipts shows the total receipts for the year was £917. Interest receivable for June is £81, is received on 10th of July 2017. So we are having a year ended on 30th of June 2017, yeah, and then the money for the June of that 2017 was received in the July, 10th of July. So they're asking you to update the interest receivable account below, show clearly your cash book figures. So for this purpose, I'm just going to think about it from a perspective. Can you see here? There is some accrued income. And accrued income, what do you think it is? If somebody paying you money, income, they paid you, that's an income, all right, that's fine. But if they fail to pay you that in time, what that becomes to you? If you think about it, take a minute to think about it. Will that be something similar to your sales? Can you see that from the perspective of sales? You sold something, they haven't paid you yet, they may pay later. But at the moment in my account, they stay in my RLCA. Remember that RLCA account was what? A debit account. So it is an asset. So the prepaid income in this scenario, this not prepaid, the accrued income means the customer hasn't paid you. It's similar to that one. So what I will do, I'm going to quickly create this account here, accrued income, at the start of the year. It will have this amount as balance brought down £90. This is how we start the year. This one will not be there yet. Okay, this is how we start. And what we'll do when you start the year, the accounts all need to be cleared of their accrued or prepaid status because they will go into their relevant income and expense account. So in this scenario, how to remove this? When I'm going to remove this, I'm going to credit this into that accrued expenses account. We're going to say here, interest received £90, and here accrued income £90. So that means it clears this account. This account is now cleared. It's no more amount in there, but your interest receivable account will start with that £90. So meaning of this, the customer or this party owed you £90 at the beginning of the year. Now what they have done, they have paid 917. So if I'm going to look at this from the bank account perspective, what will be the entry on the bank account? £917 received into the bank will be a debit entry into the bank account. Yeah. So if that is a debit entry into the bank account, what is the entry in this scenario here? This will be a credit. So I'm going to say bank 917. But now we also consider the interest receivable amount for June 19, for the June for this year. It's £81. We received it on 10th of July. So meanings that £81, it's not within that 917. But as per the rules we talked about earlier, that interest receivable amount is part of that year ending on 30th of June's income. It needs to be shown in my profit and loss statement as it needs to be included on that particular month. So what is that now we're going to say here? We're going to say accrued income £81, because this one we're not paid yet in that year or that financial period, but eventually will be paid on the month after, which is the 10th of July. So if I had done this here now, this accrued income account, which is already empty, now is going to be back to active again. Now that year is finished. So this one I'm going to simply grayed out. This is grayed out. That means they no longer have to be worried about. Now the accrued income account will say interest receivables or interest received. Yeah, receivables. In this scenario, £81. So they're asking you here, the first question is the cash book figure. So in the cash book figure, how much we have entered. So here with this is the cash book here, and this one is for the first part. So I'm going to say here, I'm going to change the color to that one because that is what they're asking you here. Can I highlight? Draw, yes, highlight. So that one. Now next one is year-end adjustment. The year-end adjustment is done by, I don't want to draw now. Draw. Okay, so here the year-end adjustment is going to be done on green. Okay, so that is, hold on, the year-end adjustment. That is the year-end adjustments we have done. And the last one, the transfer the amount to the profit and loss statement. So how I'm going to do is find out how much is the total. So what is the total here in this scenario? It's going to be equal to that number plus that number, which is equal to the same amount. So transfer to SOPL going to be the difference between that number minus that number. So it's going to be £908 will be the profit and loss figure. So this is basically my yearly income on the interest side of it. That year I have earned £908. Even though what it shows here, we received £917 for that year, we only earned, according to my calculations, £908 because £90 were owed from the previous year, and this year £81 will be owed for the next year. It's going to be carried over to the next year. So that £90 they paid during this year, it comes off that amount, and then this £81, which is this year's income, which is not paid, will be added to this interest receivable account. So they're also asking you, on what date will any adjustment that you have entered above be reversed? So that means if I done this on the last day of the period, which is the 30th of June 2017, when they will be reversed. Remember, this reversal happened at the beginning of this period. That means it was done on the first day of that period. And the same happened to this number here. This will be reversed back into this account on the first day of the next period. What is that first day will be? That's going to be 1st of July 20 7, because here the year ended on 30th of June 2017, or whatever year you make of, and this will be the day I'm going to be reversing, will be the day after that financial period ended. It will be reversed back into the accounts. Let's see one more question here. This one here will be a very good example of that. So here, this activity is about accounting for accruals and prepayments. Let me see whether this question is the easier one. No, this is an easier one than the other. So let's try this first, okay? Ollie started his business on 1st of June 2003. Okay, that's a long time ago, Ollie. The bank summary shows payments for selling expenses of £985 during the year ended on 31st of May 2004. Included in this amount, the last payment made of £300, which was for the quarter ended on 31st of March 2004. Now, when you're going to look at it here, I need to make sure in this one, this is the first year. Is this the first year? There is no opening balances. Think there is no opening balances at all, and we have to start entering these entries into the book. So let's look at the first year account. First year account says this one will be what is that again? What is that they're talking about? Selling expenses. So selling expenses. So you know for a fact this is supposed to be a debit account, means it's an expense account. So they also saying here the bank payment shows there is the amount of 985. So I'm going to say bank 985. I got that. So far so good. But now we have to think about it. Here on 31st of May, once the year is finished, they also saying included in this payment was £300, which was made for the quarter ended on 31st of March 2004. Okay, so the last payment was made, okay, in 2004. Write up the selling expenses for the year ended on 31st of May 2004. Close it off by showing the amount transferred to the profit and loss statement and show the appropriate accrual. So let me digest this for a minute. 31st of May, including the minutes, which was for the quarter and 31st of March. Okay, year ended on. Okay. There's something missing in this question. It's kind of a threw me off guard there. So give me a second, guys. Let me quickly check it. Yeah, bear for a second, please. Let me find out where this question could have gone away. Give me a second, please. FAPS. Okay, selling expenses, accrued expenses. It's 58. Okay, I understand what they got wrong there. They structured the question slightly wrong there. So let me go back in there and rephrase it to you. So what they mean by this, the included in this payment, which is not right. So I'll rephrase that one. Let me say what happened here. So I'll highlight it with a darker color. So get rid of this all. Okay, £300 was the expense for the quarter ended, not, it's not quarter ended on, it's supposed to be started on. Wait a second, please. Okay, so it was the quarter. They should have said slightly differently because the question was slightly wrong here. So let's say this way. There was an expense of £300 for the quarter started, or maybe say 1st of April here. I think the question they drove it completely wrong there. So there might be some correction from Osborne's because this are found from the Osborne book. So it's slightly wrong than what it should be. So let's say here, I will insert a text box quickly. Home, insert a text box. Where are you? Insert. Text box. Okay, text box. So here, which was for the quarter, ended on April, June 30th, 2004. So this is how it should have been. Okay, so what happens now? There is a £300 there, which was for the quarter ended on 31st of June 2004, which is not paid until June 30th. Okay, so let's say here, this is the scenario. How would you work on that one? So what you now have to remember, the year runs from when? 1st of June. So let me write it here. 1st of June 2007, and it finishes on when? 31st of March 2004. This is the time it's going to be finishing. Not 2007, 2003.
Mo, you're not sharing your screen.
Okay, let me just bring it up. Thank you for pointing that out. Let's share. See, there's sometimes trouble with publishers. They make errors there. Until you see that question, you will not know how to correct them. So I got that screen now on you for. So it says here, the bank summary shows the payment for selling expense of £985 for the year ended on 31st of May 2004. And £300, which was for the quarter ended on 30th of June 2004, not paid until 30th of June on that month. It was paid at the end of the month. So now what we now have to do, need to find out what was the real expense for that year. So for now, we paid so far £985, but we have accrued £300. But is it all 300 of that is going to be part of that year's expense? It may not be. Why? Remember, it says here the year ended on 31st of May, but that quarter is ending on 30th of June. So how many months in a quarter? It's normally 3 months. Not normally, means it's always 3 months. You have 12 months in a year. So that means a quarter of it is going to be only 3 months. So for the last 3 months, which is going to be April, May, and June. So for those 3 months, expense was £300, which is not being paid yet. It was paid on the following year. But for 2 of those months, the expenses were accrued. Why? Because you're not paid for it in that financial period. So how much we haven't paid for that month? it's going to be 2 months worth. So how are you going to find it? Divide it by 3. We'll find the cost for 1 month. Multiply by 2. It's 2 months. So that one we're going to start here called accrued expenses, £200. So this accrued expenses will in fact now increase that year's selling expenses. Once we done this here, we create this accrued expenses account, and this one will have an entry on the credit side. And remember guys, I said to you, if you owed something you haven't paid on that month, that will become a liability. So here this one is selling expenses account, £200. So what happens now? This now will be transferred to the statement of profit and loss. So what is the amount we have here? So let's say here all of that amount, £1,185 will be transferred to
Mo,
hello.
you know the £200 and the is it
Yeah,
200 or 100?
it will be
You know the
200.
£200.
Yeah, because of the £300, only 200 belongs in that current year, but it's not being paid on that year, isn't it? Does it make sense? If it's not paid on that year, it's only 2 months worth of, it's not been paid on the year, because you have April, May, and
Oh,
June. Does it make sense now? Those
yes.
3
The
months worth
200's
of goods.
missing. Yeah.
Yes,
Yeah, I
200
get
is
you.
not being
Thanks,
paid.
missing.
Yes,
Yeah,
for
thank
that
you.
year.
Thank you. I was
Excellent.
thinking
Well
it
done.
backwards. Yeah, thank you.
Yeah, that is the main mistake students make. You're right there, because you're always looking at, oh no, it's only for 1 month is missing. It is not missing for that 1 month, because that month is going to be for the following year. So we don't care about that at the moment. We only care about what for the current financial period. So here, that was a very good question. So now it was transferred to profit and loss statement. Now it will all make sense. It will all make sense now when we're going to reverse this and come back to the normal again. So let's say here, this is how we finish the year. Okay, so this will be going on my profit and loss statement, and this will go in my what is that again, statement of financial position. We'll do one of those questions as well later on. £200, and this will be eventually will become balance board down on this £200. Now we got this. Now we got all of it sorted, but this is the year ending on that and finishing on that now. So when we go into look at the next year, we starting on 1st of June, and this is finishing on 31st of May 2015, so 2005. What will happen now? We have the similar type of accounts again, but it will start with this original balance. Can you see here? This will be a balance board down of BBD, £200, but this account start with nothing. It has nothing there, but it will start with a negative balance. Now, can you see here? The expense will have, once you reverse it. So I'm going to say here, balance board down. Now, this is what we call the reversal. So let's say here, we reverse it to selling expenses account. We call reversal. And this one will be on the credit side, we'll say accrued expenses reversal. So now can you notice that the expense account already has some money in there on the opposite side. Now let me make it clear for you what will make. So 200 here, 200 here. Okay, so this is how we started. But don't forget, this £300 was paid on the 30th of June of 2005. So this month we have paid that £300. So when we look at that bank account, what we done, when we paid that £300, now realistically you can see there only £100 will come off for this year, because the £200 was actually covering the previous debt we owed on the previous period. So if I'm going to say there is no further selling expenses on that year, how much is my expense for this year now? The current year now we're looking at this particular year. How much you guys think my expense going to be if there is no further selling expenses? Is it £300 or is it just £100? It will be just £100 now. Why? Because this £200, it's already covered whatever we have accrued from the previous accounting period. So that's why it's very important to understand pro rata, where you have to think from both side of it. One of them gets carried over, one of them will go into your statement of profit and loss, statement of profit and loss here. So let's see one more question here. This I found it in Osborne books as well. It is similar thought. So let's start with it. They're saying here, this activity is about for accruals and prepayments and preparing a trial balance. You're working on the accounts of a business for the year ended on 31st of March 2015. In this activity, you can ignore VAT. There was no VAT there, anything there to worry about. So they're saying here, the balance as at 1st of April 2024. Now, what is the meaning of that? These are the opening balances. That means we are starting with an accrual and also we starting with a prepayment. So if I'm going to go back into this question here for that expense, if we starting with a prepayment or an accrual, can you see? If it is an expense, accrual will start on the credit side. A prepayment will start on the debit side. So let's say here, if there is an accrual, when we have the accrual account, what we call again, reverse it like we seen in this one. This is how we started it. This reversal entry will bring a credit balance. So let's see here. This account will be accrued expenses. And this time is a reversal. How much is that for? £650. And then on the next one, prepayment for the office expenses. That means here, prepaid expenses. And this is my reversal of £200. That means they already paid £200 of this year's expense last year. So this is, we starting with a balance. You don't have to pay too much into it now because you can pay a less of it. So let's see here, this one. The bank summary for the year for payments for advertising expenses of 11,200. Included in this figure is 2,250 for the quarter ended on 31st of May 2025. So we are in plenty of time to look into that one. So let's say here, bank paid how much? 11,200. Now, let's think about it from my the calculations earlier, how we done this. Okay, so let's say here, included in this figure, it's £2,250 for the quarter ended on 31st of May 2015. When the year finishes for them, if you look at that here, the year starts and finishes on 31st of May, the 31st of March 2014. So what happened here basically? So the year start from what? 1st April 24 to 31st March 25. So this is the time period. So what happens here? They already paid for 2 months into the future after your accounting period is finished. Because if you notice that here, if that is finishing on 31st of May, so from 1st of April 2025, you paid for 2 extra months there. So what happened here? We have overpaid. Overpaid means that is going to be a prepayment for the next month. So what I'm going to do, I'm going to open the prepaid expenses account now. So let's say here, I'm going to say prepaid expenses account, expenses. And we're going to think about it. What will be the entry into that prepaid expenses? Did I pay too much or less? You paid too much. How many months you paid? 2,250. That is for a quarter, which is for 3 months. So we have to find the cost for 2 months. We need to take it away. So divided by 3, you'll get 750 a month. And for 2 months, that will be 1,500. So what we need to do, we need to remove it from my this year's expense. So this one, if I want to remove it, can I put it on the same side as where the original expenses is? No, it has to be on the opposite side. So we're going to say here, prepaid expenses, £1,500. But on the prepaid expenses account, that will be a debit entry. So we'll say here, advert expenses. What happened to you in this one will be a £1,500. But remember, guys, this one, because it's prepaid, if I pay something in advance, this is going to be an assets account. This one will carry over as an asset for the profit or statement of financial position, and then it will get reversed back into this account, and this will have a credit entry, or sorry, it will be a debit entry like you have seen here. But now, the part the students don't get it, they'll look at it and say here, oh, why you have accrued expense and the prepaid expense on the same side? I had this question several times as well. Don't they opposite mean? Yes, they are opposite, but you have to remember, this is a reversal, means it carried over from the previous year. When it comes back into this year, it simply means I have to pay more this year to cover for the last year's expense. That's why your bank is paid too much out. So what is my real expense for the year? So let's work that out. So that amount is that number and equal to that number, and transferred to SOPL will be equal to that minus these two. It will be £9,050. That is your expense for the year. So for you, what do you think about it? When you transfer into the profit and loss statement, the expense for this particular account is only £9,050. This one is covering the previous year's accrual, and this one is taken away because you paid too much on that month, because you already paid it at the start of the year or whenever it is there, but you covered 2 months into the future. This part, please keep an eye on it. It comes like that way. Sometimes if you have a further accrual, it will be going on this side. Instead of a prepaid expense, the accrual will be going here, because it has to be a liability, because it needs to be added on as we looked at before. Now you see that example here on this question. Now can you see here, a bank summary shows the bank payments were how much? 4,601. So we're going to say 4,600 here, and this one is going to be 4,600. Okay. Now it says here on April 2015, okay? It is after the financial period has ended. The financial period ended on when? 31st of March 2025. But in April 2025, £140 paid for the expenses incurred in March 2025. So what is that problem here now? We have incurred that expense. Can you see that word here? Incurred that expense. Let me highlight it with a lighter color. Yeah. Can you see here this word? Again. True. So here in March, year is finished, but in April we paid £140, which incurred during the period just as finished. So what is the meaning of that now? We are accruing another expense. So in this scenario, I would go here again. This one we call accrued expense, because we need accounted for this year, isn't it? So this one will be £140, and altogether the total will be £4,940, which will be the same amount as that. So we will say transfer to the profit and loss statement, Control V. This will be £4,940. Can you see here? This both came on the same side, because in this one we started with a reversal of prepaid expenses because we paid too much. But on this year, we didn't pay enough. That means some of the expenses were accrued. We have to pay that on the following year, which needs to be accounted for in this year. So two things to make sure, guys, for us. Very importantly, we check what were the numbers carried over, and this way we will be able to identify which one it is. So if I'm going to do this one, I will be going here, and instead of having that, we will say accrued expenses account, which is a liability because we owe that money, and this will be a credit entry. We will say here office expense, and this is for £140. So basically this will go into my statement of financial position. So let's see here one more question now, and this one, it is going to be something to do with prorata. Like it's like when you get the electric bill. Normally when you get the electric bill, you need to make sure you enter them as you incur that cost, not when you're actually paying for it. But let's see here how things working out. TIG has an year end on 31st of December. During 2022, the following electricity bills were paid. On 14th of March, you paid up to 3 months to February 28th. So now remember, guys, the year ended on 31st. Yeah, but we paid for 3 months to 28th of February, £300 on that month. So what you now have to remember, this part of it only will be counted towards us. So that means £100 were carried over from the previous year, because you have to remember, February is only the second month. So the bill is for, in this scenario, if I'm going to do this bill, it has to be, now if I'm going to make it clear, this one from 1st of December 2021 to 28th Feb 2022. So this is the real scenario here. What we need to make sure, we need to accrue the previous amount properly, and we need to make sure this account is been properly entered in the system. So let's find out how it goes. So here, and then also 3 months to May, it's fine. 15th of September, it's fine. And 12th of December, and we had up to this one. And then they're saying here, there is an opening accrual of £100 at the beginning of the year, which straight away confirming to my assumption was, because this £300 means for 3 months, for 1 month, which is the previous year, we should have had £100 accrual, because we only supposed to be paying for this year when it comes to our accounting record. So let's say here, we will start with accrued expense, which is a reversal. So this will be my opening balance on this account. So here there's a £100 accrual. We had an opening accrual on 1st of January, and it is estimated the electricity usage for the December 2012, that will be £120, which you haven't paid. Can you see the pattern here? You pay after the bill comes. That's how you pay normally, isn't it? When you have your electric bill, when you pay that, do you pay that straight away, like on the day? Unless you have smart meters, they can readily track your usage. But conventional way is you get a bill and then you pay once you get your quarterly statement. And then this is how this business is been dealing with. So what we now know, how much expenses were paid. So I'm going to say here, with the bank, I paid £300, and I paid by bank again £280. And then with the bank, I have paid how much? £190. And then the last one, bank, £310. So if you noticed, when I put bank here, the net entry will be between those two will be only £200. Can you see these two now? These two will cancel that £100 towards here, and it will only count for £200 towards the current year, which is going to be your January and February. So that's the reason I have done it like this way. So let me just quickly insert another line now, and probably another line again. So now what you need to also remember, what is the amount we're going to be accruing for the end of this year. This is going to be me I'm saying accrued expenses, which is £100, which is for the December of 2022. So this one is for December 22. Let me increase the size a little bit. Yeah, okay. So this is my accrued expense for December 2022. I need to find out how much is my total expenses going to be. So let's say here, let's sigma this. The amount is 1,180, equal to that amount. So the expense I'm going to be transferring to SOPL, that will be equal to that number minus that number, which will be 1080. This is my electricity expense for the year. It is not what is actually paid. How much I paid altogether. If I'm going to calculate these four numbers, if I'm going to say how much I paid with the bank equal to the sum of these four numbers is 1080 as well. What? Oh, my fault. Here it should be £120. That's why I thought why that is not looking right. Now I can see why it was. All right, so here my actual payment from the bank was £1,080, but my expenses for the year is £1,100, £1,100. Because if you noticed, the accrual from the previous year is being reversed, which is for £100. But this year I have my December expenses is £120. So it's £20 more, and it is how it's reflected on my statement of profit and loss. What will happen next year? Next year, when I'm going to pay my quarterly bill, I will be paying this £120 in March next year, and then it carries over and gets finished off. Okay, so that was the good questions we're looking at. And this is also similar question I have, but instead of doing that, I decide to do this particular extended trial balance question. You will get this extended trial balance once in a while in your exam. Possible chance you may see a pretty good one. In the past, this was part of advanced bookkeeping unit. Therefore, they used to test this on every exam. But nowadays, it's seldom they choose a lot of options. But it's best to be ready for it. So if I'm going to see here, there is some prepaid expenses here. Administrative expenses prepaid £125, and then also rent prepaid. So I'm pretty much sure here that rent is an expense. This is an expense, and this is an expense. There is no incomes they are talking about. Can you see on the list of numbers I have here? I don't have any income. Everything is an expense. So, oops, my apologies. I dropped a pencil box somewhere there. Okay, now let's see here. What are the adjustments I'm going to make? Okay, so these were the trial balance figures earlier. The adjustment we're going to make in this scenario, prepaid expenses. So here I will normally say in this scenario, in these two boxes, what should I do? Okay, let me just add two extra boxes here. Insert. Yeah, I can include two more boxes there. So I'm going to say here, accruals and prepayments. These are the adjustments I'm going to be making. So the scenario, I'm going to look at it here. My total prepayment was £450 and £125. So altogether, it's going to be £575. Again, I mentioned to you, prepayments are your assets. Therefore, it goes into my debit side of the adjustments there. So how much is that going to be? It is going to be £575 in this trial balance. So on the adjustments. So what are the numbers I'm going to look at it here? One of them is the rent and rates. the total numbers were there 7,238. Because it is been prepayment, we have to take that away, so we have to put that on credit side, 450 pounds. Administration expenses prepaid 125. So let's say here it is that amount 11,334. Here the amount is going to be on the credit side 125. Can you notice when the adjustments done, they let me just do this here. Let me freeze this so we don't have to scroll back and forward. Where are we? No, it won't work because I have an image there, so it might not work. Give me see review. Freeze panes. Oh yeah, it does work. Excellent. That's not bad. All right, so I can basically scroll down and see that headings there. So what is the last one? Vehicle expenses accrued 90 pounds. Therefore, the accrual will be a 90 pound credit, which is a liability. And then also we have to go into the vehicle expenses. Let's find out where the vehicle expenses are. And this will be 90 pounds added on the debit side because it's going to be added to that particular scenario. So now let's say here, let's do the extended trial balance. So the capital is the credit. It goes into the statement of financial position. Okay. The drawings, it's the opposite of capital, 10,860 pounds. Purchases will go into my statement of profit and loss, 110,355. And then we have sales revenue. It's an income. It goes into the profit and loss statement. So it goes be that much amount. Vehicle at cost is going to be an asset. 27,500 pounds. It goes in there. Now, vehicle expenses, on the other hand, it is an expense. So this number is going to be 6,244 plus the adjustment of 90 pounds accrued expense. So I'm going to say here, why I have a problem. Okay, that box D9. That's going to be 6,334. Loan from the bank, it is going to be a liability. That's going to be 22,500 on the statement of financial position. The bank amount 3,147 pounds is an asset. Office equipment at cost is going to be 9,750 pounds, which is an asset. Wages is an expense, 45,233 pounds. It's a expense. Discount allowed is an expense, 247 pounds. Discount received, 396 pounds is an income. And then the rent and rates account will be 7,238 pounds plus, or is it going to be minus? Because remember, this is a debit number because it is a prepayment. We must take this number away. So it will come up to 6788. Now let's look at the RLCA account. RLCA is an asset, 40,296 pounds. And then we have the payable ledger control account, which is a liability, 19,421 pounds. Then we have administration expenses. Again, guys, look at that. There is an adjustment on it. It's going to be 11,334 minus that number here, 125 pounds, which will give you 11,209. So sales return is an expense, 1,076. Purchase return is an income, 2212. Opening inventory will go in the debit side of the statement of profit and loss. It's part of cost of sales. You probably will learn about that in future classes. I will try to see whether I can include that when we do the inventory valuation. 3629, which is a liability, the VAT. The closing inventory will be going on my statement of profit and loss on the credit side. 10,854. This will be part of your cost of sales calculation. Therefore, it will be on the credit side. And the closing inventory on the statement of financial position will go 854 on the debit side, as this is your current asset. So we got all the numbers now. Now we need to find out what is the profit. So the profit will be, it's going to be equal to this minus that number, and which is going to be equal to, no, it can't be. I had to type it manually. So I have 17,342 pounds, which matches that number. And then let's see here, 17,342 £342. And can you see here? Oh, there is a slight change in there. The reason why I haven't done that properly, because it's my silly mistake. I haven't added these two together on that number. So what I should do in this way, I will move the prepayment slightly up here. I'll move these two one slide up, so I don't have to confuse myself over here. So can you see the difference now? The £90 and 575 are they not gone into my statement of financial position? So it is a moment I'm learning where this goes. It goes here as a liability, and this one will go here as an asset, 575. Now can you see my trial balance is now settled with these two numbers? Can you see these both numbers now matches? If you haven't seen these numbers are matching, where your double entry is gone somewhere wrong. Now in this way you have 100% confident the way we have looked at this liabilities account and the asset account, which is the accrual, is a liability here. So that is a red one, and this one, it's an asset. So these two will be reflected on my statement of financial position, and these will be reversed back into your general accounts later on. So I might also give it a go with this particular question now. And let's say here, because this is a stretch question, I was only planning to do if I had time, and I have some time, and then we will be able to do this question. Okay, so now let's see here. Dory's policy for accruals and prepayment is as follows. An entry is made into the income or expense account, and an opposing entry into the relevant asset and liability account, which is the accruals or prepayment account. In the following period, the entry is reversed. So it will be brought back into either the income or the expenses account. So now you're looking at the rental expenses for the year ended on 30th of April 2025. So we're looking at the closest year, which is this year. The cash book for the year, the rent payment shows for rent is 12,500. So here, rent paid or rent expenses. I'll say rent expenses. I didn't say rental income, rent expenses account. It says there, we start with a bank payment of £12,500. So I'm going to say bank £12,500. Let's start with this. Now next one, this includes payments to two properties as follows. Property A, 1st of January to 31st of December 2015. And the next one is property B, 1st of April to 2025 to 31st of March 2026. Okay, so what we now have to remember, what is the current year and what happened in this scenario? So basically what they're saying, we paid the rent in advance. The prepayment of rent was made during this year. It is included in this £12,500. So now what we need to do, calculate the value of adjustment required for the rental expenses for the 30th of April 2015. So what we're going to do here, I'm going to say prepaid expenses. Now we have to look at the property one first. What is the property one saying here? It is paid from 1st of January to 31st of December 2025 for £3,000. How many months worth? That is 12 months worth. So per month, the charge will be 3,000 divided by 12, and that is going to be £250. So for me though, I have paid £1,000 up to April and another £2,000 until December. So for the property A, 8 months prepaid. So if you paid 8 months prepaid, we need to remove 8 month worth from the expenses. So we're going to say here prepaid expenses £2,000. That is now getting deducted from that yearly expense, because now the property is being paid for the next year, but I paid it now. So do I have to show that on this year's expenses? No, it cannot be showed in this accounting period. It has to be pushed to the next period, because the accrual concept is you only show what you actually incurred, not what you paid. You paid 12,500, but out of that, £2,000 is for the next year. You paid too early, that's your problem, but for your accounting, you cannot show that as your expense because you didn't actually incur that expense. Now let's look at the next one. This one, 1st of April 2025 to 31st of March 2016. So here, property B, 12 months, 5,400. So 5,400 divide by 12, per monthly charge is £450. But for property B, how many months were overpaid in this scenario? It is 11 months. If you noticed, you have paid for this year April, and that's it. The rest of them are for the following financial period. So I need to also remove 11 months worth of prepaid income. So how much is that? 11 times 450. So here I have another prepaid expense. It's going to be equal to 11 times £450. So these two amounts are taken away from here. So this is the cash book figure, and these are the year-end adjustments, and these will go here as rent expense, £2,000, rent expense, £4,950. These will be eventually reversed on the following year. We don't worry about that. We don't care about that. All we care about, what is the number it needs to go on the profit and loss statement. So here it's going to be that, and that's going to be equal to that number. So transferred to SOPL, the amount is going to be this minus that. Two numbers are finished. My actual rental expense for this year is only £5,550. That's it. These two are prepaid, which can be accounted for in the next year in my expenses account, but it cannot be part of this year's expense. Okay, so this is the fundamental behind the accruals and prepayments. Whichever way you're going to churn it, what you find out there is to identify what is your period. Where your account is going to be concentrating is when your expenses incurred or your income has incurred. If you have those information, and then the rest of them, if you paid or not paid, it does not matter. It has to be carried on to the next year. Or if you paid too much for this year, yeah, that carried over the next year. If you haven't paid enough this year, that's also get carried over to the next year as either an accrual or a prepayment. So guys, I hope you find this session on accruals and prepayments useful. And of course, guys, you have to remember, you have to keep on trying your best with these questions, because these are the ones the students do normally struggle with. They will also have to do what is that again, the like you've seen in this question here, you start with an opening balance expense here there, and then you also will end up having the new adjustments to come across. So these questions are frequent. You will get that once in a while in your exam. As such, you have to do these two expenses accounts. You just have to make sure just to identify what was the original amount we reversed back in. Again, these are the amounts you reverse back, and you enter the entry for the bank transaction where you paid the actual expense, and then we have to adjust for at the year end whether there is any more further accrual or prepayments, and many different ways. These questions will take different phases. They put it different numbers, different types of accounts, sometimes income, sometimes expense. Identify what they're talking about. Accrued expense and prepaid income are both liability. Prepaid expense and accrued income are both assets. Why? If you prepaid an income, expense, that means you paid too much, or accrued income means they haven't paid you enough. So both of them are assets, means they will be a debit account. When you're going to reverse it, it will be on the debit side of my expenses account. Can you see here? A prepaid expense came into the debit side of that account. But when it comes to accrued expense or prepaid income, they are both liabilities. Therefore, they will start off when you do a reversal on the credit side. So I have that in my slides as well. So if I probably quickly show the slides in this one, where's that slide? Here you go. So for prepaid income, you have to look at it here. Prepaid income is a liability. Can you see that here? A current liability. And then now let's go back and finish this off. Prepaid rent received is shown as what? If I'm going to talk about this, prepaid rent received means it is an income they prepaid you. What is that going to be for you? It is a liability. Okay, if it is a liability, it cannot be an asset, it cannot be a debit. Yeah, it is a credit balance on your prepaid income account. Yes, that is how it's going to be. It will be on the credit side because it's a liability, and it's not an income on the profit and loss statement, because if you notice that the prepayment is not your income for this year, it is going to be for the next year, so it cannot be that answer as well. The only answer can be is C here. Now look at this one. A debit balance at the start of the year for the vehicle expenses account indicates a reversal of what? So if you start with the debit balance, can you remember? Only could have been reversed if your initial accrual or prepayment account has a debit balance, because we're going to do credit and debit into the expense account. What is that going to be? If it's going to be a vehicle expense, you start with the debit balance, means it is an expense prepaid because you paid too much, and you start this year with the debit balance, means you don't pay too much in this year. So anyway, you're going to work this out, guys. Draw the T accounts to make your life easier. Whenever you have a T accounts, remember your debt clicks as well, and you will do absolutely fine there. And thank you so much for joining today's